Cynthia Tomain with Interactive Brokers, and thank you for joining today's webinar being brought to us by Capitalise on how automated trading can help improve your portfolio. We are very pleased to have with us this afternoon, or wherever you've joined us from, whatever time of day it is. We're very pleased to have Shahar Rabin, CEO of Capitalise, to discuss today's webinar. So with that, Shahar, I'm going to go ahead and pass you the controls. If you can share your screen, let's go ahead and get underway here today. Thanks for joining us, Shahar, and welcome.
Thank you very much, Cynthia, and thank you everyone for joining us today. So like Cynthia mentioned, my name is Shahar. I'm the CEO and co-founder of Capitalise. And maybe before we get started, we'll go on a little tour around the room, asking you guys where are you joining us from. Could be interesting. So maybe use the questions panel to let us know where are you coming from before we actually get started.
If you would, go ahead and
India.
add into that questions panel. India. There we go. Now they're coming in.
India. Vikas, nice to meet you. We have Jacine from Quebec, Damien, Montreal, Vina, US, Paris, Thierry. Nice to meet you, Thierry. I'm broadcasting from Tel Aviv. So with that, we have South Carolina. Nice to meet you, Bobby. Let's get started with the session. So let me ask you guys, using the same questions panel, what do you think makes a trader? I'd like to know in your minds, who is a trader? What makes a trader, whether a good one or not? Please use the questions panel to reply. Yes, executing proper entry and proper exit. Grid, excellent, yes. Good risk implementation. Actually, so for me, it's three things that all of you guys have mentioned. First of all, you need to have a trading plan, right? So that's your proper entry and your proper exits. Not less important is the ability to actually pull the trigger, right? Strategy, that's the trading plan. And you have to be very disciplined. The saying goes that you need to plan your trade and then you need to trade your plan, which means you need to think of your setup or your strategy, getting you in the trade and getting you out of a trade beforehand. And usually when we don't do that, it's very hard to think clearly when we're already emotionally invested in a trade. Now, for each zone, whatever the risk-reward ratio might be, as long as you're statistically overall, our winnings are on the plus side, you should be fine. Which sounds simple, right? But it's actually, we all know better. It's not that easy. It's sometimes the pitfalls that we encounter on our trading plans are mostly by the fact that we are all human, and it is our human nature that usually betrays us, whether it's greed. When we're in a trade, and you mentioned it, when we're in a trade, it's going our way, we find it very hard to simply close that position just because the trading plan suggested everything looks good. It looks as if we're going to keep on making money, and we keep that trade open only to see it going against us and ending up losing or making less than we should have. So greed, that's one factor. Fear, that's another factor that prevents us from using proper stop losses, taking on those losses, agreeing to absorb that loss. And we say to ourselves, if I just keep it open, it's going to rebound and go back, and I'm going to make that losses back. And we ended up losing more than we should have. Sometimes it's actually boredom. So we are very bored. It's been a long time since we've seen our setup triggers an entry. And we see a setup that is close enough, right? You might know that feeling. So you dive in and then you ended up losing. And sometimes the fact that we're human, we have, our lives, we need to sleep, we have families, we need to work. We don't always have the time to be there at just the right moment and take on those trades that our trading plan has suggested we should have taken. So it all comes down to being disciplined. So discipline is very, very important in sticking to a good trading plan. Now, not all of us encounter that problem. In the last 20 years, there's been a great shift in the financial trading industry. It is believed that today, more than 80% of the global trading volume is actually being traded using machines, algorithms that runs massive trading orders on a magnitude that just keeps on growing. Now, there's a huge distortion in the market, as it's also believed that only 2% or even less of the market players are actually utilizing those machines. So less than 2% of the market players are responsible for more than 80% of the global trading volumes just because they use machines. But let's pause for a minute and talk about algo trading. What is actually algo trading? What does it mean? So in general terms, algorithmic trading means the use of a predefined set of rules written into computer code in order to automate the process of buying or selling. By the way, if you have any questions during the session, feel free to write them down in the question panel, and I'll try to answer them as we go along. So by this general definition, the term algorithmic trading could apply to any computer-generated market operations. So sometimes this term refers to order execution, irrespective of whether the origin of the actual underlying trading decision is computer-generated or not. And at the other times, this term can refer to the actual trading process where the computer entirely replaces the human trader, taking both the trading decision and often, but not always, managing the execution. So this could also be referred to as automated trading, systematic trading, or black box trading. Execution algorithms are used primarily to achieve the best possible execution price, or sometimes minimize the market impact, sometimes very large orders. For example, we want to disguise a large order by moving in small amounts of orders in optimal circumstances. A good example for that could be VWAP or TWAP. For those of you who are not familiar, VWAP stands for volume weighted average price, which means I'm gonna put small orders in the market based on the average volume over a longer period of time, just so I wouldn't affect the market. The same goes if I want to trade in an illiquid instrument. I can't, just throw $1 million order or a market order at an asset that trades $500,000 a day, because I'm going to buy it very, very expensive price. So execution algorithms are a good way, or very efficient way sometimes, to manage that process of getting in trades. And actually, Interactive Brokers offers many execution algorithms. So I invite you to go into IB's, if you're not familiar already, go into IB's execution algorithm and take a look, because IB offers a lot of different execution algorithms. There's a wide variety. Very good ones. So I want to talk a little bit about how in recent years trading has changed by the fact that today we have more information that we ever had before. We are literally swamped with data. The kind of data it was once very hard to come by with is now flooding us all over the network. today, automated trading systems are using much more than price and volume. Many of them are using fundamental data, so macro and microeconomic events. A macroeconomic event is U.S. interest rate, unemployment rate, housing, but also technical indicators, sentiment indicators, geopolitical events, weather, input from across the universe of asset classes in order to trade different asset classes. All the data that is out there on the internet is up for grabs, and a lot of different algorithms are using that in order for taking trading decisions. So I want to take a look at 3 examples that I gathered. And there are literally hundreds of them over the internet. So the first one is a macroeconomic event. So on December 19, the US Fed has announced that it's updating the US interest rates from 2.25% to 2.5%. And the market was already on a downtrend when they did that. And this announcement has added fuel to the bonfire. So we can see that the market dropped more than 9% in a few days just because of this announcement. On a personal note, I had some open positions. I wasn't available to manage them, and it got me scared a little bit. But being aware to such events could be crucial if we want to respond on time. So that's the first example. The second one is another interesting one in regards to the long-term to short-term yield curve. So in general terms, the difference between the long-term interest rates in the US bonds and the short-term interest rate, it's been a good indicator in predicting past period of recessions. So we should expect that a long-term bond would have higher interest rates as it inherently holds more risk, right? We don't know what will happen in 10 years, but when looking 3 months in the future, we have some certainty. So this chart represents the difference between those interest rates. If we deduct the 3-month interest rates from the 10-month interest rate, it should be positive mostly. And in this chart, we can see that we have 3 main periods when those interest rates difference actually reversed. Every time it went below 0, that means that the market had a prediction that maybe in the short term, there's uncertainty in the markets. The first time it happened, we saw a recession. We saw the first recession when the oil price shock of the early 90s, where Saddam Hussein invaded Kuwait. The second time it happened when the dot-com bubble burst at the beginning of the millennium. The third time it happened was in the 2008 global crisis, which was ignited by the US subprime mortgage crisis. And last time it happened was actually right now. So on March 22nd, a month ago, for the first time since 2007, this spread, this difference between those interest rates has dipped below 0 once again. And let me show you the chart right here at the tip of the chart. And what we saw is a very quick response in the market where this is the S&P. It dropped below the 100-day moving average and a major support line. But it didn't last. It didn't last because that was a small dip, but then prices or the interest rates has recovered, and we didn't see just yet a real effect on the market. And the last example is from Twitter. So last August, Elon Musk has tweeted this very interesting tweet, which said that he's considering taking Tesla private. And the market response was immediate. We saw an increase in just one trading day. We saw 11% rise in the stock in one trading session. So in terms of social effects, sometimes it's specific posts on social media that can affect stocks so dramatically, as we see in this case. But in most times, it's the overall crowd sentiment that can, at times, show some sort of prediction over price movements on particular assets. All of these are examples of how different data sets from around the globe, around the internet can affect the markets, and we can't always be there at the right time to react in those occasions. Unlike before, today trading is available 24/7. Beside the fact that we have trading across the globe, we have the cryptocurrencies market, which is another market that has been booming. A lot of traders have shifted and went trading cryptocurrencies, and that's a market that's being traded 24/7. And in that respect, it's not really a surprise that automation has become such a big trend, and it just keeps on growing. Today, it's 80% of the global trading volumes. We don't know where it's going to be in 5 years. And the reason is simple. When using machines, people are limitless. They can trade around the clock on multiple markets at great speeds. Machines never get tired. Machines never ask for a raise. And the value of using automation in trading comes in many, many different ways. The first one is we can use automation when we want to manage risk. An automated trading system is a valuable tool when it comes to manage risks. There are so many global events that once they occur can impact our portfolio. Now, not all of them we can think of in advance, but for those we can set the rules to protect our portfolio in advance. For example, let's consider the first example I've shown when the US interest rate was updated. What if I could have command a robot to look at the next time the US interest rate updates, and if at that time my portfolio suffers more than, let's say, 1% loss, then simply close all my open positions. So risk, time. Time is our most valuable asset. If we look and take a deep look at our daily trading routines, they all pretty much look the same, right? We sit in front of our trading desk. We're waiting for events to happen, and then we react to them by placing trading orders. What a waste of time. Not to mention that we can't be available 24/7. But if we allow a machine to take over this mundane task, we'll get our lives back, literally. We can free ourselves to do, more things, focus on the other things in life, maybe research new trading techniques, and we can simply do more. Another factor that machines can help us with is the human bias. With automation, we can disable our human emotions and bias. We can plan our trading ahead of time, and the machine will take care of it exactly as the plan dictates. So no more greedy trades or trades that are generated by boredom. The machine doesn't get bored. Now, I'd like to show you a tool that we in Capitalise have developed for the past several years and is available for you that can provide you with some automation capabilities. So Capitalise is a trading platform which is available to trade with through your IB terminal, and Interactive Brokers is the first broker in the world that now suggests using Capitalise. And when created Capitalise, our goal was clear. We wanted to provide any trader with a simple solution to take his daily trading routine and automate them, whether they are simple or complex, short-term or long-term. We wanted to let you provide you with the ability to do that. And at this point, I would like to switch to the TWS and actually show you how I launched this platform and how I use it, how I can use it to automate my trading. So this is the TWS, which you're all familiar with. I'm on the Mosaic view. Let me open a new window. When I open a new window and I have the analyst research, I have all the available tools and I have the subscribe tools. So I'm already subscribed to Capitalise, but you will see that Capitalise will appear under your available section. When you click on Capitalise, you're able to sign up for the platform. When I'm clicking on Capitalise, it would just launch the platform for me. So this is the Capitalise platform. And just a quick few words around about the platform. The platform is connected to my IB account. And with that, I can actually create automations on my portfolio. And the way I do that is by describing the market conditions and the actions I want to perform in plain English. So we've set out to build a tool that will allow us to automate our trading, but without having to code anything, without having to have any kind of technical background. And the way to do that is just to communicate to the platform using plain English. And so I can tell the platform what it is I'm looking for and what it is I want to do, and the platform will take it from there. And let's take our first example where we said, we want to react on the US interest rate. So in that case, I can say that, let's say I have an Apple position, which is open. And if the US interest rate is released and it affects my Apple trade in such a way that I want to close the trade, let's tell the computer to do that for us. So I'm going to write in plain English, if the interest rate, and now when I write, the platform tries to auto-suggest the words that I'm going to use and help me with my filling of my strategies. So I can continue writing if the US interest rate results are above forecast. Okay, and at the same time, the SPX crosses below, let's say, the 100-day moving average. So that's a condition where I might want to exit my position. So in that case, I would like to sell my Apple position, which is 100 Apple shares. And with that, I've created a scenario that the Capitalise platform will manage, will seek that those conditions or the specific condition in order to close my position. Let's hit simulate. With the Capitalise platform, I can simulate my trading. And because this is my real account, I don't really actually want to close my Apple trade. So when I'm going to hit next and confirm, I've just created an algorithm that tracks the markets for me and looking for the next US interest release, and then at the same time looking at the SPX if it crosses below the 100-day moving average. If those two conditions happen, we will get an execution and my Apple trade will be closed on my IB account. Let's take a look at another example and another powerful feature for the platform. Let's think of a situation that maybe if the VIX, the volatility index, which today has risen by, I think, 8%, maybe if the VIX trades above a certain level, which means the markets are volatile, and I'm a technical trader, so I might want to look at one moving average crosses another. That could be a good trigger for me for entry, or good or not, it depends on the type of trading strategy that I have. And let's say that that could be a good setup for me. So I can say that if the VIX trades above, the VIX is on 12 points, so trades above 18 points. And at the same time, let's look at Facebook moving average. So if Facebook's moving average, what kind of moving average? Let's say the 20-day moving average. So Facebook 20-day moving average crosses above the 100-day moving average. That would be my personal trigger to buy Apple. Or Facebook, or any kind of assets, by the way, or baskets of assets. So what I created here is another strategy or scenario where these conditions happen, and I can add more and more conditions as I go along. I'm going to enter a trade, but when I'm going to hit next, I can also add conditions to exit the trade. And let's think of a situation where I want to close my position if maybe Facebook moving average, let's say the 30-day moving average, crosses below the 100-day moving average. Or maybe it's trailing stop. Maybe I want to use trailing stop loss, trailing stop of 3%. I can do that as well. And I can go on. And what I created here is basically entry conditions and exit conditions. Now, I can run this once, or I can run it in loop, which means every time this scenario happens, it's going to buy, and then it's going to sell. After selling and exiting the position, we will try and look for the entry again and again and run this basically in loop. Let me show you how it looks like. I'm going to run the simulation, and I have the dashboard here that shows, okay, right now we're working on entry. On the entry, we have two conditions. That's why we have two widgets. When both conditions apply at the same time, we will get the trade tickets. Basically, our trade will be generated. We will be able to see that in the TWS as well. And we will start looking for exit conditions. Because this runs in loop, it's going to go back and forth. And basically, we can set our long-term strategies using the Capitalise tool. So our mission was clear. We wanted to create a platform that anyone can use very, very easily, and thus the language mechanism. And we wanted to make it powerful enough so that we can manage the decision-making process of the algorithm, but also the execution part of it. So we can have the entire thought process being run by the machine, and then the execution, VWAP, TWAP, anything that comes to your mind, we'll be able to tell the platform, hey, I want you to do this in this way or in that way. And this platform is available for you right now through the TWS. And at that point, I would like to go back and ask you if there are any questions that I can answer. This kind of wraps up what I wanted to talk about today. So let's use the questions panel to see if you have any questions. So Vina, so you asked, can you use this for options? So the answer is yes. Right now, it's set up to work with equities and FX, but in the near future, we'll add options as well. The platform is agnostic in terms of asset classes. So it's a matter of setup. We just need to add more asset classes. This is very new. It's just been released recently. Can you test algo before running it, simulate moving price and see impact? That's theory. So not now, but yes, in the future. We are now working as well on backtesting, which will allow you to write a complete scenario. Complete scenario exists from an entry and an exit, and you'll be able to set the dates, hit a button, and see how it would have played out, a complete backtesting with results and statistics on your trading. Does it also work with press release such as earnings release? So earnings is going to come soon as well. Part of our job in terms of data, we're constantly adding more and more data sets, connecting to more data sets. So earnings is one of them, social sentiment and impact, weather, all of those data sets that I've mentioned will be available for you. Our vision is if you can, describe it using your own words, you will be able to describe it to the platform and let it trade for you. Let's see other questions. Can I ask to buy Facebook before it rises, Thierry? You want to write buy low, sell high? Well, we'll have to be more specific. Otherwise, we would be magicians. Can you define an indicator and use it with your formula? I'm not sure what you meant by that, Thierry. You can use any kind of technical indicator, and we're adding more as we go along, and add more conditions and cross conditions between different types of data sets and indicators. Gus asks about Hall, so maybe all of those will be added as well. Do you offer a French language? So in terms of localization and French, right now the platform is offered in English, but we will localize it as we move along. Right now we don't have it in French. Alex asks how much it costs to use it overall. So overall it costs nothing. You are welcome to go and use the platform today. It's free as a courtesy. We've just launched, we soft launched it. We offer it for everyone for free. We will charge in the future a monthly subscription fee, but it's going to be a low fee. Can your tool evaluate the intraday? Oh, sorry, interrupt. Can your tool evaluate the intraday trading sentiment? If yes, dynamic. Okay, so our tool doesn't evaluate trading sentiment. We use other data providers, other professional data providers, and connect them as a source to our platform and allow the user an easy way to relate to those data sets when it creates its algorithms. What is the extent of your technical indicators? It's not a lot right now, but we're constantly adding more and more. Eventually, we'll have all of them. It's just a matter of time, not a lot of time. Who owns the IP related to my strategies? Carlo asks. For example, if my strategies turn out to be successful, will those strategies be used, licensed by Capitalise or anyone else? So a very important question. Your strategies are your own. We're not looking at them. We're not copying them. We're not offering them to anyone else. That would be a breach of trust if we were to do that. We're here to provide the right tool to empower you to create whatever it is you want to do. If those happen to be very, very good strategies in the future, we might have a new set of products that will allow you to make money on your strategies, something across the line of a marketplace. But this is something that I might talk about in the future. The IP is yours. Do you consider to add more indicators like Supertrend, trend, also? Definitely, yes. That's our job, to add more data sets, add more indicators, add more capabilities to the language mechanism as we go along. Okay, the best practice. Is there a sample of the best practice strategies available on the platform to choose? Alex asks. So we have examples. They are not the best practice because we are not telling you how you should trade. We're not offering an advice. We are merely giving you the tool that allows you to express yourself and create your own automations. We don't know what's going to be a good trade or a bad trade. It's a very powerful tool, but it's yours to use any way that you would like. Let's see. Okay. Benjamin, can I only place market orders or limit as well? No. So in terms of, I haven't shown it in my examples, but you can place market orders, limit orders, ICE, or basically we allow you to write any scenario for the decision making and then any scenario for the execution. So if something happens, I want to send a limit order at this level or that level. In the future, we will also add the capability to relate to IB's execution algorithms. But in fact, you will be able to write your own execution algorithms. So let's say that I want to spread my buying depending on what I see on the ask. Maybe I just want to buy 1,000 every time I see more than 2,000 free levels up the ask. So that could be a good strategy for me. Supply questionnaires. So Util asks, did you supply a questionnaire and ask about some improvements? When will they implement and which ones are selected to implement? So when you use our platform, it is very important for us to get feedback from our users. So you can use this panel to converse with us and actually ask for features. I haven't mentioned it, but we actually released this version a few months back as part of a closed beta and brought traders and asked them, what kind of features do you want us to support next? I don't want to guess those. I want to hear it from our actual users. And according to that, we will add the next releases will be released according to what the users actually requested. So in that respect, we always listen to our users, and we do have a list. Maybe I can share that, but offline. So what if, because good question, what if a strategy doesn't behave as expected? Maybe some bug, malfunction in the execution or the strategy, who bear the losses? So first of all, I want to mention that we took the better part of the last 3.5 years to develop this technology. It looks very simple, but the actual technology underlying is very, very complex. This is an algo trading company. It took years to develop something that is robust, is redundant, is scalable. We have safety mechanisms inside. One example is what happens if I set a strategy in loop and both my entry and exit conditions apply at the same time. Some market conditions can change, and maybe when I created my strategy, that wasn't the case, but then it changed and both the entry and exit apply at the same time. So it can go in and out of trades very, very fast and drain my accounts on commissions. So we have safety mechanism that detects that and actually stops that from occurring. And the platform is very, very robust. Having said that, when you sign the user agreement, no technology whatsoever is 100% fail-safe. Even though, and we've tested it and we work with a lot of strategies over the time, even though we never had a problem with it, anything can happen, right? And so this is a very powerful tool, and with great power comes great responsibility. So you have to be, always have to be vigilant and see what's going on in your account and react to that. We will compensate users if anything happens, but it wouldn't always be a full compensation. So great power, great responsibility. Yeah. Can you close with your ongoing existing position on IB? Yes. Right now, you can't refer to specific position, but you can say, for example, if I have, on last example, I had 100 Apple shares open. So if I just say, if something happens, sell 100 Apple, it's going to close my position on IB. And that was the example where I talked about if I want to manage risk, something happens, I just want to close trades. And by the way, you don't have to trade with it. You can set triggers. You can say, if something happens, I want to be notified on those triggers. And when I get notified, I will then later decide if I want to, want to trade it or not trade it. Can you define, Thierry asks, can you define variable and use them? Example, if RSI is below 50, price when RSI was at top, then sell. Yes, you can. See more question. There can be a big difference simulation and there can be a big difference between simulation and real trading. Simulation says 100%, 1,000% profit. Real is total loss. Why is that happening? Wow, Yutzil, that is a great question. Something I couldn't have answered if I wasn't myself a trader for many years, ran a lot of backtesting and a lot of strategies myself. And the reason is backtesting is not accurate. When we do backtesting, what we actually do is we adapt the strategy to the former charts. And we can always find a strategy that's going to fit on historical chart and it's going to make money. But it doesn't mean that in the future that assets is going to trade in the same way. And though many of my historical backtesting showed I'm going to make a lot of money in future performance, it wasn't the case. And that's why there's always, always the fact that, past performance doesn't mean anything about future performance. But I will say that if I have a strategy that I want to apply and I feel confident about this strategy, I'm going to backtest it anyway, just to see what happens in the past. Because if it's only lost money, then I'm probably not going to start moving in the future. And that's why it's a tool that helps to build some sort of confidence before you actually apply something. Now, using this platform, you don't have to think of a strategy that's going to make you money forever. Sometimes I just want to do something that's going to be triggered today. Today I'm on a vacation, or maybe next week. I want to set some rules to manage my trading while I'm gone. Those are not long-term investment strategies, but they are great automation responses to my needs. Let's see if we have more questions. Sorry if I missed some of your questions, guys. There are quite a lot of them. Is it possible to set rules for AU portfolio? AU, you mean Australia? Australia stocks are not supported yet, but as any other asset class, we will add more of those as we go along. Is it possible to model, Vikas asks, is it possible to model the intraday behavior of a stock market? Just curious. So now you're touching on a future product that we might develop, but not today. Today, the product is all about automation. You know what you want to do, and it provides you with the ability to do that. And I think that's all of the questions so far. If you have any more questions, so how much it costs? Yeah, we've answered that. It's free now. What kind of data sets? What is Capitalise? In a way, the one thing you need to remember about Capitalise, it's a platform that is there to help you take some of your daily trading tasks and let the computer do them for you. I have to say, it's like your personal investment assistant that never gets tired, never asks for a raise, and always follow your plans. Stefan asks, you're a stock? Yes, no, not now, but in the future. Currently, we're connected to NYSE and NASDAQ and FX, but by popular demand, this is just the beginning. We will add more and more as we go along. Yeah, I think we're done.
Okay, well, Shahar, thank you so much for the presentation here this afternoon. Also, would like to let you know, and what I'm going to do is grab the controls back for just a moment here. Let me go ahead and grab the controls, because what I do want to do is show you where you can find more information on Capitalise. First of all, directly go to their website, but also did want to point out that under the Interactive Brokers pricing menu is where you can find additional information on the research and news features that are available through the Trader Workstation. Now, once you get to this research page, you'll find some additional information on the different providers that we do have. But I did want to point out, notice at the top of the screen, you can go into where there are free services available, and you'll notice here, Capitalise is listed. Right now, our monthly fees have been waived, so I did want to point that out, as Shahar had mentioned. Notice here there is a link where you can learn more that will take you out to a page devoted to Capitalise on the Interactive Broker platform. Now notice here you'll see some of those familiar screens that Shahar was just showing us, and did want you to be aware that you can access that website directly from the Interactive Brokers homepage. Also notice here the how to start, and here Capitalise has provided step-by-step instructions on how to access this information from within the Trader Workstation content. Now notice here, as Shahar mentioned, you'll see in TWS when you go to that new window drop-down button and into the analyst research that Capitalise does appear under the available selections. But also notice that, or keep in mind that for right now, the fee has been waived if you do want to try out the Capitalise program here. So simply follow these instructions that are included, and you can access the information as well. Now, how do you access it? Well, Vina, excellent question, because notice that within Trader Workstation, once you do have it available, there's actually, you'll have to go through several steps here. And notice that these steps will give you access. First, when you do subscribe, go ahead and confirm. But notice that it will also require a website login so that you can utilize the software. So notice here there's a few additional steps that directly will take you into the Capitalise software. So with that, now actually I do have Trader Workstation open, so I'm going to bring this up, and you'll see that from the new window button, keep in mind here that remember analyst research is available, and here is where you can find Capitalise. Now once you do go in, you'll see that premium content is available, and simply go into more information here that will give you those step-by-step instructions once you do subscribe. Now notice how this takes you into the account management system, and I want to reiterate here that once you make that check mark, notice here that at least for now that fee has been waived. So with that, you can simply click the continue button and continue to be able to access that information. All right. Well, with that, Shahar, I want to thank you so much for today's presentation and remind everyone that we have been recording today's event. Each of you will get direct access to today's recorded playback soon after the session ends. So if you do want to come back and review any of the concepts that we've discussed today, simply watch your email later on this afternoon for a direct link to the slides that we've been using for today's presentation. So with that, want to thank all of you for participating with us here this afternoon. Have a great rest of your day, all, and thanks for joining. Have a good one. You can all exit using the X in the upper right-hand corner of your screen. Thanks, everyone.